Good morning, everybody. It's Matrix here, and here is my recap for my small account challenge, December 14th. Um, as you can see, my P&L and my tickets, they're all here already. This is the day. Account blown. So as you can see here, I'm down $240. I took one trade, AMD. All my tickets are here within 1 hour. Now, this is probably one of the hardest videos I'm going to have to make, but because the reason why I started this channel and this playlist and my small account challenge is because I wanted to show the truth and I wanted to be as transparent and as honest as possible to all my viewers out there and to all the traders out there who are just starting to trade or learning to trade and trying to dabble into trading. It's tough. It's difficult. It's not an easy task. All right. With the small account challenge, my thinking was that if I can build this account, I would achieve consistency, and hence I can prove to myself that I'm a good trader, right? Or I can do this as a full-time gig and make a living out of it. Now, even though I've blown up the account, my belief and my stance on day trading as a career still stand, and I still think it's definitely possible for anyone, absolutely anyone, who put in the time and hard work and effort into this career can make it. I mean, day in, day out, I'm looking at living proof that people are doing it. My mentor, Patrick Mitchell, he's doing it. He's been doing it for 6-7 years now, and he is nearing, well, let's just say he's nearing a 7-figure year. Okay. Today was a difficult day, and today was a difficult day in the market. I mean, let's bring up the SPY here. Let's do a quick recap. And after the recap, I guess I'll go through the main few lessons that I've learned throughout this small account challenge. So the market is very difficult to trade. It's choppy. It ever since October, when this came down, it actually got into bear territory, and we have all sorts of catalysts coming out with trade wars, and then the Fed's coming out with rate hikes and stuff like that. It's into a zone where it really doesn't know what it wants to do, but overall, it does look very bearish. Okay. Now we've actually broke through some key support here in this channel here. I mean, if you take a look at this right here, this little box I've drawn, basically for the past almost 2 months now, the market has been just going sideways as compared to 2017. If you look at the market, this is what happened 2017, just a slowly grind up. But this year, it's been choppy, right? February happened and this happened, right? And now we are coming into this sideways chop. With that said, I personally think the stance on the market, I personally think the market is bearish. It's into correction territory. I can even pull it down a little bit some more, that it's trading around this 265, 270 area for quite some time. As you can see, the 50 EMA coming down on it. The 200 SMA is curling down. It's sloping down a little bit now. It's starting to come down. And every time the market pops up here, it's basically the big money manipulating the market, in my opinion. Making this big pop, getting the retail guys, people like us, the trade at home guys, to believe that the market is going to bounce. And that way we would all buy, and hence they can all sell it down into our buying, and they make money that way. So yesterday on my Facebook page, I posted a CNBC article, a news article, saying that basically from October, the big money has sold off $46 billion already, and that's their main plan. So the market's been choppy and difficult just because there's a conflicting interest of the retail traders uh, getting manipulated by the big boys, and like the smart money and the dumb money. There's a conflicting interest there. The dumb money thinks every time this market bounce a little bit, the dumb money thinks that uh, we are coming back, and they load in and they buy in and they buy that dip. But in actuality, I mean, the overall main big picture is that the market is coming down. Um, but because of this conflicting interests, we see that the market is chopping up and down, up and down, up and down here. It really doesn't have a sense of direction. It doesn't really know what it wants to do, right? Overall, the big picture is a downtrend. And let's get into the trades. So with it being a very difficult market, uh, and this is a direct quote from Trick himself, my mentor. He says, if I'm having trouble trading today, even though I'm making money, and he banked today as well. He's rarely have red days. But he's having a lot of trouble trading today. He says, if I'm having trouble trying to read the market today, I don't expect you guys to be killing it either. The best way is to sit out or size the fuck down and trade as safe as possible, or even not trade, because not trading is okay to not trade. It's definitely okay. Not trading in itself, that's a trading position. That's called a cash position in the industry. Now, I guess the reason that led to my account blowing up today, or the reason why I went a little crazy on the account today, is because deep down emotionally, I probably couldn't get through the fact that I took a loss yesterday on 5 of 5 losing trades. And that's literally a first for me in 2.5 years of my trading career. And last night I was up to like 3 a.m. looking at the chart over and over again. And I'm thinking, how the hell did I end up losing 5 for 5? And I can't come up with it. It's basically, I chalked it up to the market being very choppy. I wasn't able to get a good read on it. And my thesis was good, but the trades just didn't work. All right. So today I came into the market thinking, it was just an anomaly. It wouldn't happen to me again, because I know my trade theses are good, and that my calls are most of the time accurate. So last night on AMD, I called for the market to gap down, and sure enough, it gapped down, and so it did with AMD as well. It pulled down to it, and my thesis was to look for a pop into the 20 area and watch for it to reject from there, because 20 was a key psychological area. Let me move this camera. 20 was a key psychological area and a key resistance here, right? Let's mark off 20. As you can see on the daily chart, wow, 20 is a long ways. Now, obviously, the stock has popped up a lot from 20, but as you can see on the daily chart, 20 mark here, this was I was looking for to pop and drop. Basically, I had the thesis of the market pulling back up a little bit to fill this gap, to fill this down gap, and then dropping it. Right. So the market did dump, and that's what it kind of did. It popped at the open, and it's now coming right back down. Where did it start dropping though? I mean, time of day is very important here. It topped out at around 10:15, and it dropped. So my trade today all happened before 10:15, as you can see here. And I guess I was just early on it, and I was too stuck up on my bias of that this stock will get sold down along with the market. You know what? I'm just going to bring in the market here as well, the SPY chart, because as we watch this is very interesting because the market's selling off, and I like it. It's working. It's working to what I called out. And AMD selling off as well, as you can see on the 5-minute chart. I'm going to zoom out a little bit, but I want to get through these trades first. So out the gates at the open, I saw it's already opening low, right? So it basically, I was going to wait and anticipate a pop right into this 20. So that's exactly what it did. It dropped a little bit, it recovered, and then it popped. Now, as it came up really fast, I was also paying attention to yesterday's closing price, and this was at 1985, right? So my first trade was to get in at the 1975 mark, because the 1975 was basically a quarter, or a kind of like a psychological number here, every quarter, every 50 cents. So I got in on a starter size of 100 shares. And my idea was my plan was to give it to $20. And if it broke through that, I was going to get out. So I started in at 1975. As it came up, I was definitely sitting okay with it. And from here, the next red candle, I see it pop up and it got rejected. And once this rejection happened right at this closing line, or yesterday's closing line, I added one more shot to it to get a better average on it. And this in itself was basically, according to my plan as well, I was expecting the stock to sell off here. So I did see a major slap here on the wick, and I added in another 100 shares. That would bring my average up to 1980. Okay, so my average after this first ad is now here. Okay, my initial entry is right here. Okay, and then it popped right up and through, and I was still okay with it. I mean, the next candle open, it came down hard, and I had a chance to take some off, as I gained how much here? 10 cents, 9 cents, right? But 9 cents is seriously nothing. And my big picture idea was to bring it down to the lows. Okay. So I held on, and I was like, let's wait for it to work. And then it closed on the highs, and I was still okay with it because it's coming into the 20. Now, as it was coming into the 20, it had a lot of trouble here. Let's move this bubble out of the way here. It had a lot of trouble here coming into the 20. It was very wicky. And as soon as I saw this wick come down, I added in one more shot, okay, at 934. That would bring my average to exactly right here at 1985 when I added in. Now, I was still losing, and I was still following my plan. But by this time, my position size is huge now. And basically, I'm in the red. And I wasn't really thinking about my account size per se. I was just thinking about the trade and how I need to stick to my thesis. It would work, and it will sell off. Wow, the market's selling right now. So this next candle came up, closed a little bit under 20 again. The next candle opened a little down, started selling off. That got me happy, right? But my average is still down here, so I'm still in the red. I'm like waiting for it. And then it popped through the 20. So once it popped through the 20, I wanted to wait for it and wait for the next candle to see what it does, because when the stock comes up to a very key psychological whole number and a resistance mark. What the big money does is most of the time they'll take profits, at least some profits, if not all of it, right? And the stock has shot up parabolic. It only makes sense for this to pull back. So from then on, I waited one candle, and this candle popped up and started selling off right back down under the 20 mark, just as I thought. And when I saw this happening, I was thinking, okay, this trade's going to work now. And I'm going to get my size in as it comes down. So I hammered it, another 100 shares added. Now that brings me to a total of 400 shares. My average is now at about 1887, a little bit better. Okay, 1887. I'm still in the red. That's about where my average is. And the next candle, it pops up again and tests this resistance prior high. So I wasn't worried. Still, it got stuffed. And then the next candle, this is where it happened. This is where I got emotional. And it basically based at 20 and ripped. Okay. From here, I should have took my trade off, like literally right away, because my main idea was 20. But I basically got into an emotional state, got carried away, thinking, being too stubborn about this trade, and it popped right through, and I held it. I didn't cut it off. So by then, I was already down quite a bit now, about $100. Next candle opens up, dips under, and when I saw this wick come down, I still thought that I had a chance, but I never did, and it popped up. And then now I'm in a state of shock, and I'm trying to decide what to do. And as this rip, I was thinking 2050s. 2050s. Okay. So ideally, I was supposed to take it off, reset, and then watch for the 2050s. But because I was already in shock, I basically held on and held the bag. This is one of the biggest noob or rookie mistakes one could make. Hold the bag. As it comes up, now my plan is for 2050s to hit, and for the reject, that's my plan right here. And as this come up, I think I hit it right here. It pulled back, and once it pulled back, I hit it and added a little bit more. Now my average is up to, that's where I added. Now my average after this add was up to about the 19, wait, here, let's check this real quick. 2039. No. After this add, my average was, let me think. I think it was about here at 2010. Yeah, after this add. Something like that. Then I was looking, now I'm staring at the P&L. And my plan was to see it fail at 2050. I'm staring at it, and the P&L was getting really close to blowing up the account. So finally, I took it off right here at 2042. I couldn't wait for it to hit the 2050. So I took it off to get the fuck out, right? Because all of a sudden my logical side kicked in, and I told myself, Matrix, your account's gonna fucking blow up. Here, take it off. So I took it off. By the time I took it off here, basically my account had $5 left in it. And it was too late. I mean, had I held the bag or took it off, it would have been the same. If I held it, maybe I wouldn't have gotten closed out here on my account. They wouldn't have closed me out, and I would be able to capitalize on this down move. But no, I took it off right here on this pop candle because I looked at my P&L and I was thinking, oh my God, I'm about to blow up my account. And basically my consciousness kicked back in. And it kicked back in at a very weird time. It kicked back in late. So that's what happened. I got out here. Now I was sitting here with $5 left watching it. And this thing's ticking back and forth and it's holding. And then I saw this resistance. I saw this hard pullback. And I saw this stock reject right here at 2041. Okay. Now, because the stock has gone parabolic, I'm thinking, okay, any time now. And I've drawn this trend line. So I'm thinking backside. And this would have been a possible lower high, right? That's what I was thinking. And then as I see how the stock kept failing at the 2040s, you can see all these wicks here. And even this wick. When this wick happened and failed, the very next candle, I basically took the trade. And I entered as this candle, this wick came down below, right here, below the previous green candle. That's my entry. Okay. Because I saw this top wick blow up over and failed. And this to me looked like, and I also saw the massive volume too, right? So, I mean, if you look at the volume profile here, this was significant volume. It popped up and failed. This to me was a seller's candle. So I took this trade short as it broke through the low of this green candle. And basically, it was a fake out. And it popped up and over. It stopped me out automatically because I didn't need to set a hard stop here. This was the threshold where my account would have blown up. So my broker just stopped me out. And that was it. Okay. And that's how my account got blown. Now, zooming out and taking a look at the big picture here. Double top right here, 2050. As you can see, double top right here, pull back, ran up again, pull back, and then now I can draw a trend line, right? And as I was watching this, I'm thinking, okay, I've made a video about this, the backside of the trade, right? When the stock snapped its major uptrend, this is where the backside came in. And I made a lesson about this. This is where I should ideally short. When it snapped, it came back. See how it tested this trend line perfectly? This was the end of the uptrend or the front side of the move. Now I want to take a look at where this time is. Where did it snap? Right at 11 o'clock. Jesus. So look at where AMD is now. It's basically back at $20.10. Okay, it failed. It failed hard. Trick got in on it. He's killing it right now. Probably he banked, and good for him. Fucking awesome. That's why he's my mentor, man. Anyways, the good part about this is the funded accounts. All right, this shows the advantage of having a funded account. When you are shorting a stock, you are basically shorting on margin, right? And you're shorting on borrowed money in any other broker. But with the funded accounts, because we're playing with a CFD and we have a very, the broker would set a limit on the money, you cannot lose more than what you put in. So had my emotions not kicked in, or was I not using a funded account, when I got short here, I would have just held through all this pain, and I would have got sucked in again one more time, and I would have lost more money and turned owing my broker money, right? So that's the main advantage of this TFS funded account. This is why I recommend them as well for newer traders who want to short stocks. Okay, you cannot lose and owe money to the broker. Whereas if you were to be using any other broker, you'd be shorting on margin, and basically you're shorting on borrowed money, and that's what makes shorting uh, dangerous, is when you're shorting with borrowed money and you're unable to stop out or cut your losses and you bag hold. You can owe your broker infinite money if you're shorting on margin. This is why the funded accounts are so great, because I can only lose as much as I put in, which is the $500 that I started this account with, and that's it. Okay, they take all the risk and they cut me out. So that's the trade recap here. I hope you guys learned some lessons. Now, personally, this small account challenge, it lasted me almost a month. I'm 3 days, 4 days away from a month or something like that. Okay. I gotta hand it to you. It's tough. It's tough. I mean, looking back at today's trade, this setup, the way I traded this was emotional. This was my ego taking over. This was me being stubborn. Was the thesis right? Of course. My thesis is right. Look, it failed. But it didn't fail where I wanted to fail. I could have cut it out, reset, and just waited. Now, what led to my emotional state today was, I talked about earlier in this video, was yesterday when I took 5 losing trades in a row, right? And then at the back of my mind, I'm still thinking, man, I've been trading this small account for 3 weeks now, and I'm not making progress. And every day I'm putting a little bit, I'm adding on that little bit of mental pressure to my brain. I'm adding to my mind, and I'm trying to make this work because I want people to see it work, see the potential that it can do for day trading. But unfortunately, I failed. So it is what it is. But in all honesty, I mean, I've recorded daily on this on my small account challenge journey, and hopefully every single losing trade that I took, hopefully you guys took away some form of a lesson from it. The biggest lesson for me today, at the very least, is that when you're having a small account, and you really need to keep in mind, first priority, how much money you have in that account, and you size accordingly, right? This type of parabolic move play, this type of play I would play in my student account, right? But when I'm in intro account here on my small account with only like $500-700, I cannot afford to play a setup like this with the same size I did at 100, 100, 100. Even though my buying power dictates it, I can actually buy up to a shit ton of AMD shares or short a shit ton of AMD shares. But the risk itself would not allow me to do that, right? The way the stock moves, the parabolic short setup here, the scaling in, add into resistance, and look for the fail. This is not a 100% guarantee setup, nor is even a high probability setup. It works. It works a lot of times for me. It works about 65 to 70% of the time. It's not one of my go-to setups, but it works. I shouldn't have used it though. I don't think people with small accounts or new accounts should be using this setup. Okay, but it works, right? I mean, the one thing is, we do know that when a stock goes parabolic into a key psychological resistance area or a whole number, it's going to pull back, as it did here, as it did here, as it did here, right? Parabolic into key resistance. It's going to pull back. But the biggest problem with this setup is you don't know how far it's going to pull back. And as you add in an average up, your average can never really catch up to, like, if it doesn't pull back enough, your average cannot catch up, and you don't make profits off it, or make enough profits of it. In turn, it turns into a scalp if you took it off right here, and your commissions added up along the way. So that further reduces your profits. The only profitable way that this parabolic short setup work is you need to see it come down and continue to come down and bring it back down to the lows. I mean, that's the main thesis of the parabolic short setup. So with newer traders and small accounts, this setup you should definitely rule out if you're trading. And that's the biggest lesson I learned. Second lesson I learned is the ego trip, right? Yes, I've been trading for 2.5 years, and I've seen all these setups happen, all these stocks move. I have some sort of an idea of the price action. And in the back of my mind today, all day, I was thinking, this thing's not going to last. This up move is not going to last. It's going to come down, right? That in turn is basically a flaw, a detrimental flaw to how I lost this account, of me holding this ego trip, thinking that I know what the hell I'm talking about. And eventually it turned into a bag hold right here. Eventually it turned into a bag hold when I should have just cut it out, reset, save myself a shit ton of money, just take a small loss, and just sat and wait. And I would have probably, had I done that, I would have probably took another trade right here. I would have took this trade as it came up and pulled back. And then I would have paid myself. And I would have cut that loss from initially shorter, right? And then I would probably also, I wouldn't have took this trade here as it double topped. From then, I would have probably wait for this. I might have took this trade here. I don't know. But the real trade though is right here at the backside where it snapped. Right here, where it snapped this main trend, and then as it come up, it confirmed right here. That was the key takeaway. Right? If you were gonna short something, and if you're a newer beginning trader, this is the short setup that you should be looking for. If you see a stock go parabolic, right? So I guess it's long enough video for you guys, right? I know I rambled on a little bit here. At the very end of the day, and I know at the beginning I talked about how the market was choppy. I don't want to sound like that I'm blaming the market. I'm not. I'm definitely not blaming the market. What I'm trying to say is that the market conditions is difficult to trade right now. It is choppy right now. It's probably a better choice to not trade, or really sit back, hand tight, and wait for that one good setup instead of trying to make that trade. So had I listened to myself and sized down, had I thought about this earlier, I would have saved myself a lot of headaches, and I'm probably still going to be in this challenge, right? I would have been able to watch and see this setup happen, and it's even happened before 11:30 too, right? So because my cutoff time is usually 11:30, so I would have been able to capitalize on this trade had I had a straight head here. So, but yeah, I'm not blaming the market. I'm not saying that it's the market's fault, because it never is the market's fault. Okay, if you are going to succeed as a trader, you need to own your shit up, right? And take responsibility. The market is always right. That's what I know and I've learned. The market is always right. It doesn't have to do anything that you want it to do. All right. That's a major lesson. And from here on out, I guess, what day is it today? It's December 14th. December 14th right now. I guess I'm heading back to my student account. And because of the past few weeks of trading this small account challenge and now failing again, this is the second time I've tried the small account challenge and failing again. Um, I need to, I might consider just taking the rest of the year off and calling it quits for until New Year's, right? Uh, we'll see. We'll see. That's still a decision I'm still trying to decide whether I should or should not do that. It's definitely viable, and it's definitely a smart thing to do, in my opinion, because of my two recent failures. But uh, I'm not going to quit overall. I'm definitely not going to quit. I still have my my student account up. So, um, as far as I know, do you guys still want me to make the watch list going on, even if I'm taking the break? Uh, you know what? I will. I will make the watch list for you guys, and watch the market on a daily basis. Um, and in my student account, if I do take a trade on it, if I do decide to trade, it'll only be the prime setups. I'm not gonna try to do these parabolic setups because I need to recover and get back on a positive note. So I'm gonna be doing. I might not even trade, but anyways, enough of me rambling on. I hope you guys throughout this series of the small account challenge, I hope you guys learned some lessons here, picked up some good lessons to learn on all my losses as well as my very small wins, but very concise and planned wins. Um, Let me know in the comments below what you guys think about this video series of my small account challenge. Also, let me know what kind of lessons you guys learned and what kind of troubles you guys are running into. And let's have a little conversation. I mean, you can hit me up on Facebook, Twitter, Instagram, and Discord. Okay, I'm always willing to chit chat with other traders, and my goal is to bring to light the honest truth about day trading, and hopefully uh, help some newer day traders as well with their mental obstacles and their trading issues and whatnot. I am in no way consistent profitable trader, as you can see from the past two series, but I believe in my experience I can help out a little bit or point you guys into or steer you guys away from the wrong directions. Let's just say that. All right. Thanks for watching. Check out the video links below in my video, and you guys have a great day. Have a great Friday. Have a great weekend. And if I don't see you guys again, if I don't make a trade recap again, I hope you guys have great holidays for Christmas and New Year's. Ciao.